everyone. Obviously a nice small room here, so you guys will have the luxury of asking as many questions as you like. This is going to be a nice informal conversation here. My name is Marc Seewald. I'm Senior Director in EPM Product Management, responsible for a few areas within EPM, planning, profitability and cost management, as well as our tax line of products. Obviously, Tax Reporting Cloud is one of our newest business processes to the EPM Cloud. Real quick question, actually, before I get started into it. Any of you attend the Sunday Symposium yesterday? Okay, a couple of you. So I'll cover a little bit of the same ground that we covered in the symposium, but I should be a lot of new territory, and I'll give you a live demo so we can walk through things a little bit slower in pace here. Hopefully the bandwidth is good. Tax Reporting Cloud is, again, that's something I mentioned yesterday, but it's the latest business process into the EPM Cloud. It was brought into the cloud in February is when we launched it. Had a very good fiscal Q4 with our product. We already have a lot of good big logos that have adopted the technology or moving forward with their implementations. We have one customer that's up and live on both tax provision and country-by-country reporting, which I'll be talking about here in just a moment. A little bit about the background in tax. Another show of hands here just to keep it interactive. Anybody in the room responsible directly for tax? No. Is anybody in the finance organization? Are you in finance? Okay. Anybody in IT? Okay. So mix of everything. So I'll try to keep some pretty high level, give you guys a little bit of background, and that's precisely what this is. So why tax matters is that really over the last, I'd say 10 to 15 years, the level of scrutiny on corporate taxation has gone to a fever pitch, effectively. And this is a good example of the kind of pitch. At any given moment, you can pick up the Wall Street Journal, Financial Times, any kind of newspaper. You're probably going to see something negative about some company in the news. The top one there is probably one of the biggest ones, almost $15 billion fine from the EU against Apple for their corporate tax policies. Caterpillar down there in the bottom of the page, that happened just back in March. The feds came in with guns to clear out evidence related to their tax controversy that they had with the IRS. So it is a major deal. It's a boardroom level concern. It's very important, obviously. So, and actually, interestingly enough, we're seeing an increasing level of regulation in tax. I would say when tax started becoming an interesting topic for most companies was back when Sarbanes-Oxley was introduced. Sarbanes-Oxley introduced a lot of new kind of scrutiny on controls. So material weaknesses, significant deficiencies, tax was one of the biggest areas for it. So it's an enormous challenge. Since Sarbanes-Oxley, there was a disclosure called FIN 48, which is a new disclosure requirement, came back in like 2010 type time frame. Since then, there's something new called country-by-country reporting, which I talked about. I'll talk more about it in here. That's starting next year. And even following that, there's something called SAFT, so Standard Audit File for Tax, where tax regulators in certain countries, like France and Poland, are actually requiring multinationals to give full feeds from their ERP, basically a direct dump from the general ledger of all their sales transactions. So again, the level of scrutiny on taxation is enormous. Now, I know I talked through this slide a little bit yesterday, so I apologize if you've heard this yesterday, but I want to do cover it again just for the folks who weren't there yesterday. I want to talk a little bit about how we help our tax customers. And we started with our tax domain back in, I believe it was 2014, 2013, something like that, with our Hyperion tax provision product. It's now used by hundreds of companies. Since then, we've also launched other on-premise tax products like Hyperion Tax Governance. Our profitability and cost management tool is also used by tax departments. Large companies like RBS use our profitability and cost management. So again, our products are used in tax across many companies around the world. Top left-hand corner, a couple anecdotes. First one is 2 days to 2 hours. That is a large oil and gas company based out of Canada, actually, and they have they had a financial close process that was too slow. They wanted to speed up their financial close the books faster. So it was a CFO-driven initiative. They had a manual tax provision process in Excel. They wanted to automate it. They used our on-premise product at the time, Hyperion Tax Provision. They took their provision from 2 days down to 2 hours. So that's the kind of benefit. It's not just the benefits to tax, it can be a benefit to finance. Up in the top right-hand corner, or top of the screen, I should say, in the dark gray, 5 weeks to 2 days. This is a good example of other business processes unrelated to the tax provision. It's not just the tax provision. There's a data collection requirement called Form 5471. If your company is a large multinational, your tax department is dealing with it. And it basically requires you to collect lots of intercompany data. You know, all the intercompany transactions. It's a real pain. Most companies collect it through Excel spreadsheets and email. And this company used to take 5 weeks just to do that. They used our tax reporting capability. They automated it now in 2 days, and they're done. So it's not just provision. There's all these little business processes within tax that are ripe for automation. Finally, on the right-hand side of the page here, you can see automation for 80 countries. This is this new requirement I'll be talking about here a little bit called country-by-country reporting. It's been a requirement under the OECD. This is a large multinational pharmaceutical company, and they are preparing for this new requirement. The requirement starts in 2018. They wanted to make sure that they had something implemented well ahead of it. And they've automated now all 80 countries, so they don't have to do any emailing files back and forth. And importantly, one of the big reasons they wanted to do that was because this country-by-country reporting will very likely result in a lot of new audits, and they wanted to make sure that they could quickly shut down those audits. So the way you quickly shut down an audit is make sure you have a nice audit trail between your tax numbers and your finance numbers. So that's a really nice story. Down in the bottom left-hand corner, weeks to hours. That's really more not talking about Tax Reporting Cloud or HTP. That's talking more about our profitability and cost management. Profitability and cost management could be used to do legal entity allocations, which is an important business process for tax also. And then last but not least, we have a company that implemented one of our tax solutions and won an award at a Hyperion conference in the UK, and it was a mid-sized company. Now, the main reason I point that out is a lot of people sometimes think about Hyperion products as being big company products, but we have a lot of mid-sized companies using our products as well. So introducing the tax reporting cloud. Importantly, and I mentioned this yesterday as well, but you'll notice the name of the product. Our on-premise product was called Hyperion Tax Provision. Our cloud product is called Tax Reporting Cloud. So it's not Tax Provision Cloud. And that's important. We really purposely named it that way because we have added a lot more capability into the Tax Reporting Cloud compared to what was in HTP. And I'll talk you through the exact differences in a moment. Across the bottom of the screen is the best way to understand the functionality. If you're not a tax person, you can still understand it at that kind of circle level of detail. The first 2 circles there are out-of-box best practice reporting processes. So these are business processes that just about any large multinational is or even mid-sized multinational has these challenges. Automating your tax provision, if you're not a finance guy, the tax provision is part of your financial close. So at year end, when you're quarter end, month end, well, one big step within the financial close is calculating that tax provision. Most tax departments do that in Excel spreadsheets right now. So the ability to automate that is enormous. Country by country is this new business process, and the acronym there, CBCR, is a pretty industry standard acronym. And it's a new business process, so everyone's trying to figure it out right now. They're all trying to understand what the requirements are. 2018, as I mentioned, is going to be the first year where it's actually required to report on that, and I'll talk more about it. The next 4 circles are what we call our tax process improvement framework there. And that really is a set of capability that helps tax departments automate a lot in their tax department. And in general, if you haven't worked closely with tax people are far behind finance, just from a technology adoption standpoint. For the most part, they use, people, if you're familiar with them, that's a very common thing. For the most part, tax departments use Excel spreadsheets. So anything you can do to help them get out of Excel spreadsheets is a big win from an efficiency standpoint, from a control standpoint, obviously, and then, of course, from an audit standpoint. The faster you can shut down an audit, the less risk you have. So, very important points. First, let's talk about workflow. What we've done is we've included the close manager capability in TRCS. So, for those of you who are familiar with FCCS, or maybe you're familiar with FCM, our on-premise product, it had this close manager capability. I refer to it as like a workflow or a task management tool. And from finance standpoint, people use that to track all the tasks in your month-end or quarter-end or year-end close. But tax can use it many different ways because tax tends to be much more task-oriented. So for example, tax obviously has the month-end close, quarter-end close, year-end close, all the same things that finance has. But in addition to that, they're also tracking things like tax returns. And they need to do a tax return not just in the US, they have to do a tax return for every state and local area and every foreign jurisdiction that you work in. So just tracking those filing dates and those estimated payment dates can be hundreds of important dates and tasks you're trying to track. And typically those are split up between different people around the tax department. So using a tool like this, a workflow tool, to make sure you're not missing those dates or forgetting about something entirely is very valuable. If you miss a filing date, you pay a fine, you pay interest and penalties on that fine. So, other examples of where workflow can be used, I'll give you some of those a little bit later here. Supplemental Data Manager. Supplemental Data Manager is also a tool that's in FCCS and also was originally introduced on our on-premise products, Financial Close Manager. Supplemental Data Manager, and I love this capability. If you guys haven't, how many people use HFM, for example? Okay, great. Anybody use FCM yet? FCM? Okay, one. I absolutely love it. It's revolutionary, and I'll talk more about it. The way we're positioning this for tax departments, but I think it can be used by finance as well. It obviously can be used by finance as well. Is it's really to get the tax department out of those Excel spreadsheets. Tax makes spreadsheets for everything. There's just countless amount of spreadsheets, and a lot of them could just be completely redone in Supplemental Data Manager. It's a very powerful tool, and I'll demo that, and I'll talk a little bit more about it in a moment. Next circle here is a dashboard, and this is another good example where finance and tax are very different. Finance, you guys have had dashboards, you're using BI likely, or you're building reports on HFM and other tools in the EPM world. That is something that tax is really not accustomed to doing. So the ability to have a dashboard that's unique to tax is very powerful for all the same reasons finance wants to use it. So in the solution, you have pre-built dashboards as well as configurable dashboards. So you can configure anything they want to do reporting on. The dashboarding capability is the same as the rest of our cloud products. So it's the same in planning. It's the same in FCCS. So once you learn how to do dashboarding in any one of our products, it's the same across all of them. And then last but not least, the data management capability. That's the cloud version of FDME that's been included within the solution. So quick overview there. Now, I want to compare and contrast it a little bit, TRCS compared to our on-premise products. TRCS is really a good example of a cloud product. If you haven't moved to the cloud yet, this is a good place to start in the cloud because it gives you a ton of value. Just going down the left-hand side of the page are some of those items that I talked about in the previous slide. The capability in TRCS was delivered across 3 different products from an on-premise perspective. You would have had to buy HTP, HTG, and FDME all separately to get what you can get today within Tax Reporting Cloud Service, and it's much cheaper in the cloud. So it's $250 per user per month is our list price on that, and it's a lot cheaper. That is, quite frankly, the benefits of our cloud platform. Now that all of our EPM products are on one platform, we can start to share functionality a lot easier. So it cost us almost nothing to add the workflow and the calendaring and the supplemental data manager into it. So we can put a lot more value into our products by sharing features across our products now. So a big benefit of what we've done with the cloud. Also another thing, I think I put this slide on there this purposely for people who may not be deeply familiar with tax. I think a lot of times you hear the word tax and you assume it's all just one big thing, tax, right? It's not. Even our own salespeople sometimes get confused. I'll have a sales guy call me up and say, "Hey, my customer wants to do sales tax reporting. Can you help me with that?" The fact is no. TRCS is not purposely built for sales tax. So understand there are different kinds of taxes, and each kind of tax really does require some of its own solutions. You see the top 2 areas. Corporate income tax is really where the tax reporting cloud service is tailored to. Country by country falls into that kind of same category. You can see the ERP, your general ledger system, typically will have some sort of sales and use, or if you're in Europe, it's more likely to be a VAT tax. But anyhow, just so you understand the difference from a tax difference standpoint.
Question.
Yep.
Is this an add-on to the EBS tax module?
Yeah, great question. Great question. It is not an add-on to the EB tax module. So in EBS, there is a module called EB tax. In the ERP cloud, they call it Fusion Tax. It's basically an enhanced version of EB tax. It's not. They're different. They do very different things. So EB tax is much more of a transactional tax. It's the sales and use tax. So on every sale, basically, you're trying to put the taxation on it. Tax Reporting Cloud really focuses on the corporate income tax. So a different sales tax versus corporate income tax. Corporate income tax is calculated at your period end, estimated at your period end, and then your final calculation is done in your tax return. But for tax reporting standpoints, it's done at your period end.
We have EB tax, so we would have to integrate some data into this file to get.
But potentially, you could, if you want to. You can actually do some reporting. I'll show you in the demo exactly where that comes in. I'll call that out when I get to it. Okay. So I do want to talk a little bit more about this new thing I've been referring to country-by-country reporting. This is something that's been laid out by the OECD. They started working on it actually back in 2014. It went in review. It's a global standard, OECD, the global organization. It's been adopted now by all major countries, and it's going to apply to, you can see up on the right-hand side, basically all companies above 750 million US dollars, and you're multinational. So if you fall into those two categories, your company's doing something around country-by-country reporting, or will be in 2018. Goes into effect in 2018 effectively. There's actually, well, it's called a 3-tier requirement. That's the term. It doesn't really make a lot of sense, but that's the term it's called. It's called a 3-tier requirement. The 3 tiers are on the bottom left-hand corner. First tier is called the country-by-country template. That's a data collection challenge. So basically, a lot of the data you need for the reporting actually would either come out of HFM or it would come out of FCCS. It may come out of your ERP, so some of it could come from EBS, but it's primarily a data challenge. And a part of the challenge is that you don't have all of the data you need, because there's things like, even if you have a very good legal entity hierarchy in your reporting systems, there's additional tax detail that's not typically within a legal entity hierarchy, for example. The second and third tiers are called the master and local file. So master and local file, what those are is basically, it's like an annual disclosure in every country you do business in. So the 10K, the 10Q, these big, massive 100-page documents that your finance department prepares, like your annual report. You have to do that now for every country you do business in. So we're proposing that EPRCS is actually a really good fit for that. Because you're putting together a lot of narrative, there's a lot of numbers in those reports, and all those numbers need to tie. So imagine if you had basically 100 pages for 40 countries, and you wanted to make sure the numbers in all of those 400 pages reconciled, or 4,000 pages reconciled, right? So it's that's a massive challenge. That's why we think EPRCS is a really good fit for that. But I won't be talking too much about that. I do want to talk about the data challenge, the data collection challenge, the country-by-country reporting template. This is the template. Basically, the gray shade is the template. We've color-coded it a little bit, but that's the template. If you went out to the OECD and downloaded it, that's what basically the requirement. It doesn't look like rocket science. Basically, down the left-hand side of the page, you have legal entities and countries going down the left-hand side of the page. So you can probably get some of that detail out of HFM, some of that out of your financial consolidation system. Accounts are basically what's going across in the column. So you have, in green, is data that's likely to at least be partially be able to be pulled from HFM or FCCS or your ERP. And your tax department may choose to pull from the ERP instead of HFM, or maybe they pull from HFM. Anything in yellow would be pulled from your tax provision. So remember, Tax Reporting Cloud has the ability to do the tax provision as well. So that's, again, a good reason why you would be doing country by country in this solution. And then the blue column, number of employees can be stored in a number of places. A lot of times you'll store that in HFM, headcount. You store headcount in HFM. Might store that in your planning system. Might pull it out of your HR system. So, but anyhow, obviously it can be pulled in via data management capability. I'll go through, I've already talked about supplemental data management, so I don't want to kind of go through that again, but I did just want to list off a few other good examples of how supplemental data manager can be used in the solution. Effectively, it's to automate tax work papers. This slide is available. Everything's available for download on the ODTUG website, so if you want to go back and share anything with anybody in your company. Typical kind of things that can be automated are like I said, tax work papers, basically, is the general way of referring to it. But it's the work papers that not just for the provision, and so all the supporting Excel spreadsheets for the provision, but supporting spreadsheets for things like tax returns as well. You have to do a lot of data collection for tax returns, You have to do data collection for things like R&D credits. If if your company does a lot of R&D, you can get a lot of credit, basically tax credits because of R&D. For example, at Oracle, we obviously do a lot of R&D. We have a $100 million tax credit at Oracle. But the U.S. government does not let us take $100 million easily. We have to substantiate that. We have to have all kinds of Excel spreadsheets to basically back that up. And this is a tool that's perfect for capturing things like R&D credit information. It's also good for supporting things like transfer pricing. Transfer pricing is another business process that I won't get into, but there's all kinds of information that is really perfect for that tool. I've talked about dashboards already, pre-built dashboarding capability. And again, we've talked about the workflow as well already. I listed off some of these examples of where the workflow would be using. I talked about tax filing dates. I didn't mention tax controversy management. What that means is that's a fancy way of saying tax audits, basically. So at any given time, most companies are going through a pretty significant number of audits by different jurisdictions around the world, or different states, or different municipalities. Just to give you a good example, I think at Oracle, they've got over 200 audits going on at any one time. Your different stages of audits. So all those audits have different milestones you have to hit. When they send you a letter saying they're going to audit some sort of tax year, that you have to respond to in X number of days. You need to provide evidence after another X number of days. So it creates all these different milestones you need to hit. So again, those are good examples of how a workflow tool can be very valuable. And quite frankly, a lot of tax departments have paid a lot of money for for workflow tools already, and yet there's a workflow tool included in here for basically for one price, and it includes tax provision, country by country, and everything. Okay, so let's get into the demo. The way I'll do the demonstration is I'll just give you a bit of an overview here. I won't get too tax heavy. I'll keep it a pretty high level given the audience here. If you guys have any questions, just stop and ask me. Obviously, it's a really really small audience here, so I'd be happy to take time and go through something in more detail. I'm going to disappear behind the lectern here for just for a moment. Okay, let's hope I haven't timed out. Okay. All right, so I'm in Tax Reporting Cloud Service. Importantly, you'll notice this looks different than your HFM. This is what our simplified interface looks like. You've probably seen demos of this already. If you haven't seen this interface, this is really the new look and feel that really all of our Oracle products are going towards. We call it the simplified interface, or SUI, Simplified User Interface is the nickname that we use. The importance of this is it is mobile enabled, so you can access this over a tablet device. So over on the right-hand side of the page, you can see these big icons. You need big icons because on a tablet, you're going to be using your fingers, right? So it's a little different than a desktop. Over on the left-hand side of the page, you can see this is effectively our workflow capability. So these are all the tasks that I have laid or if I have open. Over here, you can see I can get to the tasks here. I have a couple of icons here for my tax provision. I won't go into a ton of detail there. I've got a dashboard. I'll start out here in a moment. I've got my country by country. There's a couple acronyms there. BEPS, country by country. So if you haven't heard that, that's BEPS stands for Base Erosion and Profit Shifting. That's the fancy way of talking about country by country reporting. And we have some other capability that we'll get into as well. But I want to start with the dashboard, because this is the area where most tax departments, or most VPs of tax, certainly will be very excited about this view. It may be hard to see if you're in the back of the room there, but on the left-hand side of the page, you can see that says total tax by jurisdiction. And on the right-hand side of the page, it's total tax by type. So this is a good example where the question earlier was asked about EB tax. So here, everything in purple is your current income tax. So that's your income, tax on income. Up here, you have a property tax. How much am I paying in property tax? Down here, how much am I paying in sales tax? So that green slice of the pie is where you'd be pulling EB tax data from to supplement that. Why this kind of screen is really important is because what I talked about earlier. I mentioned how a lot of companies are in the news for a lot of bad reasons. So companies always want to try to highlight, hey guys, we're paying our fair share in taxes. It's not just income tax, it's property tax, it's sales tax, it's the employee level taxes. So this is a very important graphic to a lot of tax folks in particular, and also to obviously CFOs and whatnot. But what's really nice is the ability to drill into these type graphics and then see it broken down country by country. So that's a nice type capability. Obviously, we also have other pre-built dashboarding capability around other tax important stuff. And of course, if you're familiar with the EPM Cloud at all, these dashboards are very configurable. So you'll notice across the top of the screen the different tabs. You can add tabs, you can remove tabs. Very easy to do that. Literally in minutes you can be building new dashboards. If you can build a form, you can build a dashboard. They're really easy to build. And they are pretty flexible too here. If I just quickly show you. If I want to go in here, I can change my chart type. Maybe I want to do a column instead. And so yeah, so you can see a column. So again, pretty easy to work with it. The underlying technology underneath it, again, is a form. If you can build a form, you're good to go. And your tax people, if you're responsible for helping out your tax department and you build them a few tax dashboards, they will love you. They will definitely buy you a beer if you do that. Okay, so let's get into some of the workflow and supplemental data manager capability. So here you'll see some of the workflows down. I can scroll all the way through all the tasks that I'm responsible for. You'll see that there's different kinds of tasks as well. So one of my tasks might be review my provision reports. So I can come in here and I can click on review provision reports, and it gives me a list of all of my provision reports. And you'll notice here the reports can either be launched in HTML, it can be launched in PDF, Excel, and so forth. So that's pretty nice. And I'll just launch one of these reports here very quickly so you can see one of these. So with the solution, we deliver pre-built FR reports. So that's nice, a suite of FR reports. The suite of FR reports aren't quite as big yet compared to our on-premise product. Our on-premise product had about 80 pre-built reports. Our cloud product's smaller than that, but every month we're releasing new reports. So in about a year's time, we'll catch up to have about the same number of reports. But again, I won't get into excruciating detail. All the typical reports that you'd need to do, tax provision, country-by-country reporting are available in the solution. Likewise, I can come in and I can look at other type tasks, and some of these tasks might be to deal with a supplemental data form. So I'll show you guys what supplemental data forms look like. And I talked about these tax work papers that a tax department might do. This is a perfect example of what might be done in an Excel spreadsheet. So you'll see the tabs across the top. You might have an Excel spreadsheet that has 4 tabs. This is actually a real customer spreadsheet. They gave it to us. They wanted to see what it looked like, so we set it up in the tool here. They not only would they have a header page, they might have some sort of investment information that they want to track, maybe kind of a questionnaire. They might have some details. This is actually specifically related to a financial services company. And then on top of that, they want to actually track some numeric numbers in it. So you'll see here over the last 4 columns, current value, book value, unrealized loss, market value. Typically, that might be hundreds or even thousands of lines of detail, and they would track that typically in a spreadsheet. So just taking something like this out of a spreadsheet and setting it up in an automated enterprise tool like this can be enormously valuable to a tax department. Question? Yeah, there's an import button. You can import it right from here. Yeah, you can import a CSV file, Excel file. That is a good point. We don't have the supplemental data manager hooked up to data management yet, so you can't use data management to load supplemental data manager yet, but that enhancement's coming, in the not too distant future. I'm not allowed to share dates here, but in the not too distant future. So, but I don't have a sample file right now, but you can import details right there from a CSV file. And so the idea is this is something that a tax department would probably have to gather every year. They'd want to review it. They might want to enrich that data. So maybe they add some sort of field. Is it taxable? Is it not taxable? And then that feeds into one of their calculations.
And can we kind of put a validation to total investments with the HFM?
Yep. Yeah, so exactly. What would want to go into HFM, that's actually a good example of what would be used for HFM or finance data as well. So it's a reconciliation of basically something that's a chart of account item. So that's precisely how it would be used in HFM or FCCS. Another good example of a tax work paper is this is a very specific tax requirement, but it's called uncertain tax positions. It's one of these new requirements. The ability to track these different positions for every entity, so you can see your entity up here. That's another good example of something that's typically stored in an Excel spreadsheet, but it can automate there. You can see I've got tons of good examples here. I've got an R&D credit example. So you might to support your R&D credit, for example, I talked about Oracle's $100 million R&D credit. You have to have these surveys effectively. So this is information. We actually have to do it. Every engineer at Oracle has to comment how much time that we spend doing R&D, basically. So we have to collect that, and here you can see the actual form that it gets collected in. So you answer some questions. Are any of your employees in your cost center, are any of them working outside of the U.S.? If they work outside of the U.S., they can't be deductible for purposes of the tax credit. You know, what products do they work on? You know, and then there's a little bit of a questionnaire related to the products. You know, how much time spent on R&D, basically. So that, again, is something that might typically be done in an Excel spreadsheet, emailed out to literally every development employee in your company. And, so, and somebody's trying to collect that information. Again, something that can be automated within a tool like this. So that gives you a little bit of overview of some of the workflow capability. Next, what I'll finish up with, I'll go into the tax provision so you can see that as well very quickly. Tax provision, basically one of the things that a tax department typically needs to do is they need to collect details around tax for your quarter close, your year-end close and whatnot. It's usually done in something called a tax package. That's just the slang that they use. What the tax package usually consists of is it's an Excel workbook. So they basically took a multi-sheet Excel spreadsheet, they email it out to every one of your regional controllers around the world, and then they collect that information back via email, and then they try to put it together in another big spreadsheet. And at any rate, obviously we have a pre-built tax package. Instead of spreadsheets, you're using your web forms here to collect that data. You don't have to build these web forms yourself. We've delivered them out of the box, and we've delivered all the specific types of web forms that would be needed for it. So really the only thing that needs to be maintained within the system from a provision standpoint would be setting up things like tax rates, setting up your foreign currency rates, things of that nature. And we have a process, and again, if you're not intimately familiar with the tax provision process, one of the really important things to do is booking a journal entry related to tax. It says TAR on the top left-hand corner. That stands for Tax Account Roll Forward. It's a roll forward of all of your tax accounts, basically on your balance sheet and your income statement. So you can see the first row is your opening balance, and if I were to scroll all the way down to the bottom, the bottom row is your closing balance. So it's really a full reconciliation of all the activity moving through the accounts. So if I scroll down to the bottom here, you can see there's an ending balance. You can see there's an ending balance per book, and then there's the difference. So effectively what you're doing, and for the accounting folks in the room, is we probably already know this, but you're taking the difference between what your calculated ending balance should be versus what the ending balance is in the general ledger, and then you need to book that difference as a journal entry. So again, I won't go through all the excruciating details. I'll save you guys from some of that, but that gives you some insight. Also importantly, you'll notice there that we have a national provision and a regional provision. What that means is that obviously most here in the U.S. there's states, so we calculate a provision at both the federal level as well as the state level. Not a lot of countries have that kind of requirement, but Canada does. Canada has provinces. Australia has states. Switzerland has something called cantons that are similar to states. So that's where regional provision is important for those kind of countries. And then the final thing I'll finish up with here in the demonstration is the overview of the country by country. And I'll start out by showing you the country by country input screen. Why this is important is that a lot of the data that can be automated for country by country, but a lot of it can't be automated. So there is going to be a need to collect data manually. So you're going to be collecting data from regional controllers around the world that should be looking at the numbers as they exist in the system, making adjustments to them if they need to, or supplying data if it doesn't exist. And that's precisely what this screen is. So I've logged in right now as a single, well, I'm not a consolidated entity right now, but at any rate, you could log in at a specific legal entity, and then the first row would be the amount that's automated from HFM or automated from the general ledger. The second row is the adjustment, so what's being adjusted, or you can supply data if it doesn't exist, and then you see the total. So there's always a nice reconciliation, and that's crucial. That's precisely the kind of reconciliations you want to see. And of course there's controls around that. You know exactly who submitted that data. You can use the audit capability within the tool to see exactly who made those changes to the data. And these are all things that are crucial when it comes to sustaining your positions with tax authorities during audit. Here's a bit of a consolidated view. So instead of logging in and entering data for a single entity, you want to maybe step back and look at all the consolidated. So you can see down the left-hand side of the page the countries going down the left-hand side of the page. You can see the legal entities in the country. And across the top, again, you'll see those counts that I talked about previously. And sometimes some companies will want more detail. So you'll see that first column called revenue-related party. Sometimes companies want to actually collect intercompany data as well, in addition to that. So, and that, as you know, our tool, because it's built on the same thing FCCS is, we do a really good job of showing the intercompany detail around this as well. Last but not least, I'll finish with our tax risk dashboard. This is really relevant. Tax people love this as well. Nice drillable dashboard. Here I can kind of drill into some of my numbers if you wanted to drill them. But what this does is it basically shows all of your tax risk around the world. Tax risk around the world. I can't pronunciate. Good example of it. I talked about it in the Sunday Symposium yesterday if you saw it. But the kind of tax risk is things like when you have too much revenue in one country and not enough employees, for example. So in a very common scenario, most companies, just about any technology company typically has business in Ireland, and they have a lot of revenue in Ireland mysteriously, but they don't always have a lot of employees in Ireland. So that's almost always a red flag, but it's those kind of analytics that we're providing. Lots of ratios, return on equity ratios, return on capital, other income tax paid, and so forth. But if you click through all these, you can see here we have lots of pre-built tax risk KPIs built into the system. And then, of course, again, these are configurable dashboards, so they can be changed and added to as well. So that gives you kind of a whirlwind tour of the demo. I'll finish up the presentation, and then we can take any questions. So I want to talk a little bit more about the rest of the requirement around country by country. I'm not going to talk about TRCS at the moment. This is really more a discussion around EPRCS. If you remember when I talked about this country by country, it was 3 tiers. There's the data collection requirement, which I showed you the demo for that. And then there's also this master file and local file. That's the 100 pages of detail you have to collect for every country you do business in. EPRCS is really good at. How many people have seen EPRCS, Enterprise Performance Reporting Cloud Service? Okay, so those of you who aren't familiar with it. EPRCS is a tool that helps you with narrative. It helps you manage large documents. We originally built it to help with to deliver an annual report. So when you're working in HFM or when you're working in FCCS and you're done closing the books at the end of the year, you have to put together a 100 plus page document that gives all the explanation, all the narrative around your annual report, effectively, all the numbers coming out of the HFM. EPRCS is a tool that helps build that. It builds all the collaboration around developing that document. Typically, lots of people are contributing different sections to that document. A lot of people need to review and approve it, so there should be some controls around it. And really, one of the biggest factors are the numbers obviously all need to reconcile. So that is, I'll give you an example of what EPRCS does, but it does that for all kinds of things like annual reports and like the master file and local file. So first thing it does is it provides a standard template, and that's really important. It may not seem like a big deal for an annual report, but for a master file and local file, you need consistency. So there's common header, common footer, common formatting. Next thing it does is you can automatically pull data from any of your Hyperion or Oracle sources. So when you have a disclosure like that, I know you can't read it, you don't need to read any of that stuff, I know it's very small, but you can imagine in these big reports you put together, there's going to be charts and graphs and things like that. Obviously the numbers need to reconcile. You always want to have the latest numbers. So the numbers can be automatically pulled in. Likewise, you want to manage the, question?
I think it's actually what you're talking about here.
Okay, yeah. So managing the narrative. And that's a big deal too, because typically you have to explain what's in the numbers. Revenues went up and we believe it went up because of this reason, blah, blah, blah. So, and typically that narrative is scrutinized. Somebody authors it, somebody else wants to review it, maybe they want to change the wording of it. Typically that's done by emailing Word documents back and forth. Instead of doing that, you can manage it all online. It manages version control, puts it all together with the numbers. So again, takes email, takes Word documents, all that stuff out of the equation. The other important thing you'll note in the question?
Sorry, this is actually.
Okay, gotcha. So this, again, hard to see, but on the left-hand side of the page, I highlighted a couple numbers basically in yellow there. So hard to see, but you don't need to see the number. But obviously in the text itself, there's typically numbers. So you can automatically pull the numbers into the text, and the most important part of that is it ensures that there's integrity. The text has to tie back to the actual charts and visualizations and whatnot. And then last but not least, you can also do what we call variables for directional words. Profit went up, profit went down, something increased, something decreased. So these reports are reports that you prepare every year. You don't want to have a lot of effort. If something swings from a profit to a loss, it should automatically update the directional words. So again, that's a lot of value here in delivering, kind of just managing all the narrative. This is really an emerging trend. We're seeing most finance departments are starting to move forward with some sort of solution to automate the generation of your annual report. And we believe next year, starting next year, I think they're going to start to look to automate master and local files because it's massively larger than an annual report. So it's a great tool. Obviously, there's different sessions on EPRCS. If you're interested, you can go into some of those breakout sessions. Question? Yeah, great question. So a country by country template itself, the data collection template, right now is a global standard. So it should be the same across every country. It's possible that some country might come along and ask for additional details. At this point in time, there's no country-specific requirements, but it could happen. And if that happens in the future, we'll address that within the product. Yeah, that's a good question. So there's typically, there's no standard template that the country requires you to do in the narrative report. Basically, there is some developing best practices around what you should be disclosing. I guess there's a standard template. There's a standard set of what you're supposed to be disclosing, and then like the actual words, most companies are working with the big four to get some sort of templates. I know your organization has some capability around that. So, but that narrative has to be updated and revisited every year as the business changes, obviously, and as the numbers change. The countries themselves, may choose to have different disclosures, but right now it's just international standard. So.
But now, if there are some tax differences between the countries and the global, can we track both the differences? Like if we are looking at the and if we are, whatever, when we are reconciling the two,
yep,
there would be certain permanent differences, certain differences which are temporary, which will catch up over a period. So now, those we want to track whether we have kind of recovered all the differences or not. Can we track this in this?
Absolutely, yeah. So first off, we do track all permanent and temporary differences for purposes of a tax provision. And then in the country by country template, if there's a specific country that has a different requirement, you can add in a different field for that particular requirement. So it's flexible.
Similarly, this narrative, so like, India has a tax audit report, which is totally different than I'm sure than USA. So can we have multiple of these? Absolutely. You could have if theoretically you could have a different format for every country. In general, you probably most people want to have common formats across the countries, but there's nothing preventing you from doing the same format. Because certain things they would like to have common for the global reporting, but local reporting they might be.
That's exactly right. But at the end of the day, all the numbers still do need to tie. So when profit changes, imagine profit changes, all of a sudden, if you do business in 40 countries, all 40 of those documents now need to have the same numbers reconciling. So no small challenge. All right, let's talk a little bit about cloud integration, and then we'll be wrapping up the demonstration. This is actually a slide that Mike Casey presented yesterday at the Sunday Symposium, and this is actually true for any of our EPM products. So, but I just want to make sure it's understood for TRCS in particular. On the left-hand side of the page are all your data sources. These can be on-premise data sources. These can be cloud data sources and whatnot. On the right-hand side of the page is our EPM cloud. You can obviously load data directly to the products. So you can load a flat file into the system, or you can load data through data management, which is FDMEE, basically in the cloud. That's one way of getting data in the system. And with that, you can still drill through. So drill through is still fully supported in the cloud. You're not losing drill through when you go to the cloud. Also, one of the great enhancements, one of the enhancements I really love, we did it about a year ago now, as long as you're on 11.124.200 or higher, then you can actually use your on-premise FDMEE to move data to the cloud. It just shows up like a normal application, just like any other application in FDMEE. So it's a normal location, is what you call it. So great capability. And then also, obviously, the ERP cloud. We have integration directly to the ERP cloud. And then we have integration between all of our different EPM products. So obviously, you can be loading data in FCCS, and it can flow automatically into TRCS. Or you can be loading data into planning, and it can be flowing directly into TRCS. And then obviously, as Mike mentioned yesterday, we're building out some more integrations. We already have integration to the HCM cloud. Our next is probably the projects cloud. We're going to be working with the CX cloud as well. So any of our cloud products will be integrated. And then last but not least, one of the newer enhancements that Mike was very excited about is FDME can now be used to load or pull data directly from the ERP cloud as well. Final slide. I think actually I might have one more slide on this, but just a little bit about the roadmap. Obviously, we've released a pretty robust version 1 product here. We've basically taken a lot of the same logic we used in Hyperion tax provision, and we put that in the cloud. So it's a pretty robust product already. There are a few features we are trying to catch up with. Our tax automation engine, we're putting on some usability enhancements in that in the short term. In the longer term, and I talked about this yesterday in the Sunday Symposium, I'm really looking forward to take advantage of more of the EPM platform. In particular, we're going to be pulling in some of that planning capability out of PBCS and EPBCS, and we're going to be moving it into TRCS to take advantage of things like predictive analytics. So predictive analytics is humongous. If you say predictive analytics to your tax people back home, they'll probably start to get a little excited about that. Also, another enormous thing we're doing is adding in basically strategic modeling. If you remember hearing strategic modeling in EPBCS, just came in the EPBCS this month. Strategic modeling is basically the cloud version of Hyperion Strategic Finance. Really valuable. Tax needs to do long-range planning, and in particular, if any of this corporate income tax changes end up taking place that's being proposed right now in the U.S. corporate tax system, that'll have massive repercussions on all multinational enterprises. So tax planning will be really important. I'm excited to bring that in there. And then the last bullet there, adaptive intelligent tax classification. Adaptive intelligence is our catchphrase. That's a bit of a marketing phrase at Oracle. We are trying to do some pretty cool things around robotics and artificial intelligence and things like that. We believe what we can do from tax is pretty special. We can actually monitor things at the transactional level of detail in general ledgers, and then automatically treat that tax reporting, the appropriate classification in a tax reporting process. So normally, if you don't understand that, normally that's something that a tax person would have to sit there and filter through a bunch of spreadsheets, and we think we can automate that directly from the transactions as it happens. So that's kind of exciting. So, one more slide here. A lot of times we get questions about auditability. This is actually the same across all of the EPM products here, FCCS, TRCS, PBCS, and EPBCS. You have a nice audit trail. You can go to the console there, and you can run queries to see what numbers have changed and all kinds of things. So that's some nice capability. TRCS does the same thing. And then also a couple of the slides I forgot about. I do want to make you guys aware that we do have other tax offerings. Tax Reporting Cloud Service is one of our offerings, but we're actually positioning some of our other products can be very beneficial to tax departments. Don't really have time to get into a lot of the details there, but really what we're trying to do here in the cloud is tie tax in the EPM world a whole lot more closely to the ERP world as well. But you can see here things like PCMCS, EPRCS, which we just talked about, even planning and budgeting cloud services starting to be used by some of our customers for something called transfer pricing. But we have a lot of offerings from a tax perspective. So with that is my last question. If you guys want to learn more about this, or if you want anybody back at your companies to learn more about it, a number of really good sessions, really good pieces of information. Cloud.oracle.com. That's anything cloud at Oracle's in there. We've really done, I think, a pretty nice job of reorganizing our web page. I will be the first one to admit our old Oracle web page was not very easy to navigate. Cloud.oracle.com is better. YouTube also. I put a screenshot on the right-hand side of it. Just go out to YouTube and you can see what I type. Type Oracle Tax Reporting Cloud. You'll see a bunch of videos. You can go out to our Oracle Customer Connect, all kinds of places. And the last thing, I'll give a little plug here for my friend in the back of the room. He's presenting on our on-premise tax product here just right after me, I believe, at 4:45, right next to it. So if you want to learn about a nice customer success implementing on one of our on-premise products, you can go see Julian here at 4:45. So with that, any questions or anything I can answer? All right. Well, I appreciate your attention, guys, and I hope you guys have a great case scope. Enjoy the rest of your day.